Hello, hello, hello. Happy Friday, PPI Friday. How is everyone doing? Good morning, John. New regular. Good morning, Patrick. John beating everybody in, too. Look at this. Sterling, good morning. Sterling, as always, when he's not tied up with his job that gets in the way of a perfectly good trading day sometimes. Getting in with the news, PPI is definitely hotter. Housing starts weaker. That sums it up, but we'll go through it a little more in detail, putting the Fed in what's going to look like a pretty bad bind. Yeah, Parkin. January's economic data has been messy and not that good. Not if you're trying to tame inflation. Again, could be a one-off, but it's both services, PPI and CPI. It's a lot of services inflation, and this is a service-driven economy. So, what? Yeah, I saw that too. Nvidia, Loop Capital initiates a buy at price target. I'm sorry, that's just really funny. 12 AI to the moon. Does this remind? What was? I mean, it's just by. What's the other one? Super compute. I don't know. It's gone vertical. Vertical up, vertical down. Good morning, Legion Reaver. What happens if Nvidia just puts weak guidance forward at some point? Morning, Heinrich. So it keeps raising the price target, and then they'll start lowering it after it starts dropping down. Coin, everything is going mad. The market's going with the madness. Buy, buy, buy. Good morning, Chris Plummer. Good morning, Anissa. Hope you are doing well. So, we had, again, Parkin speaking. We had PPI expected zero point 0.1 coming in 0.3. Core PPI coming in at 0.5. That is very, very hot. Year over year, 2 versus 1.6. Headline PPI coming in at 0.9 versus 0.6. So jumps across the board. Building permits falling down 1.5% month over month. And those are the preliminary numbers. What else do we have? Housing starts. Big contraction, minus 15%. Almost 14.8 to be exact. We want to be exact here. We got Barr speaking in a few minutes. Sorry, little itch in the eye. We got consumer sentiment coming out at 9 a.m., 30 minutes after the cash open. 5-year inflation expectations and the short-term consumer expectations. So pay short-term inflation expectations right there, consumer expectations right there. So just pay attention because, if that comes in down, although the PPI carries much more weight, but you could get a bounce off of that if it comes in better than expected, especially consumer sentiment. Daily speaking at 11, and then you got the rig count. Remember. Monday, President's Day. Stock market is closed. Futures market has limited trading hours. So do keep that in mind. All right, I will not be here Monday. Again, today we got pictures taken for the house, and then it goes on the market. So, Nvidia keeps chugging along to the moon and beyond. Applied Materials, you got a bunch of stuff coming. You got a bunch of stuff going, but the other mega caps besides Nvidia are mixed. Tesla followed through with the percent B buy, actually closed above the rotation zone and triggered the little mini inverse head and shoulders. Lilly just keeps chugging along. Your groups, let me just refresh this. Some stuff's been moving, but basic materials still leading, followed by technology and healthcare. Consumer defensive and everything else is lagging. Real estate with those not good numbers this morning, leading everything down, followed by the financials. Fed watch. Again, now we have pause in March, pause in May, cut in June, cut in September, and a cut in November or December. So really, they're down to what the Fed, what Powell was saying, with 3 cuts on his radar this year, and that is down to 3 cuts finally, and then a 4th cut starting next year. But this moving up substantially with the hotter CPI and PPI. Fear and greed, right at the extreme greed versus greed. So, and Schiller PPI still in nosebleed territory. Earnings, yesterday you had DraftKings, Coinbase, Roku, Applied Materials. This morning, not much. There's really not much, so we're not going to waste our time with that. Hey, options 22, life is good and nothing matters. Consumers can buy anything at any price. Or go into debt trying to buy anything at any price. Good morning, Royal Palms. Remind me again, there's no limit on the current consumers' irrationality. There's still too much money sloshing around. Pay attention to Palantir, the next NVIDIA. Rich says, hey, thanks for being in here, Rich. Yeah, Amazon's Bezos. Bezos is selling like this is his last meal. So, by the way, let's just take a look at the. Let's take a look. So, at the bigger picture, we went up, hit the 87.5. Hit the 87.5 before the reversal today. Are people already? I mean, I haven't looked at it in the last 10 minutes, but it already looks like it's getting bought up again. The market is okay. Yeah. All right. So let's take a look at this. We've got a new little level. By the way, I'm going to reverse. Let me get back to the something longer term. I'm going to reverse the harmonics right now since we hit that 87.5 area. So I'm going from the lows on the 13th to today's highs. We could go yet. I mean, it's roughly an area there. So key levels. It's just missing this key level, but if I come down here, we can see here with this little spike down. We've got a very strong support base now. So anywhere between 50.31 and 50.28 is the key support area. All right, the major resistance is 50.51. 50.51 today. So thank you. May the bidding war rage. I hope we get into some things over asking. That would be nice. What else? Kathy Wood on Fox Biz says she was selling some NVIDIA because it no longer meets 15% minimum gain per year requirements. Likes Palantir better, or Planter. Planter's peanuts. All right. So I'd really keep an eye on this 50.30 to 50.28 for key support. If it rolls over with momentum and a weak tick, then the next major level is about 15.19 to 15.21. It's heading into some overnight resistance, but still your key level for any stronger, where I'm looking for, if it does bounce back that far, is 50.50, 50.51. So that's what I'm looking at. The bigger picture, we are in major potential double top territory. And look at this. It would now be closing below the daily rotation zone. The weekly rotation zone, it might be closing just at. Sorry for the mess. You can see it here if I hide everything. You can see it right here that the weekly rotation zone, by the time that triggers, might be into that. And if that happens, then that would pull it back to the middle of the weekly rotation zone potentially, and the prior breakout point. So that's something now on more short to medium term I'll be watching after this insane multi-week run-up. Is that a major market breakdown yet? No. Could it lead to a more substantial breakdown? Could. But but that's the key level, especially if you've been trailing in the short term. That might be a level you want to look at as a key level for a longer term stop. Kathy, the genius sold all our NVIDIA at 125, called the bottom and jumped back in at 700. Nobody said no. I'm not going to. Kathy is Kathy. We're just going to let Kathy be Kathy. Yep. I mean, she's burning through people's money like no tomorrow. So I'm sorry if you're still sticking with her. By the way, NASDAQ in potential double top territory, also at the daily rotation zone out of the way. Same thing, the weekly rotation zone could be out of the way by if that ever triggers. And then it would be a pullback within the weekly rotation zone and roughly to the prior major breakout level. 16.7. So keep that in mind from the bigger perspective. From the shorter perspective, by the way, did anybody spot this was a little sloppy yesterday, but this double bottom which came up real nicely, calling the bottom mid-morning and then running up. And then also, just wanted to point that out to people who are trying to learn that stuff, and then running up and completing the bigger double that was set up and triggered on Wednesday, Valentine's Day, the gift from the market. So both that's stalled out right now between the 87 and 75, but that's enough to put us in that potential double top territory. If we continue, let's just say this, we get some mad buying and we do bounce back, I'm going to flip the harmonics, but remember 18,049, 18,050. That's a key level if it does break above the overnight highs. That was actually mid-morning European session highs. But I'm going to flip this right now and see what we're looking at. Just spiking through my key level to 17,923, but then closing right there. So anywhere 17,923 to about 17,905 is a key support zone. You start breaking below that, and then the next level is about 17,890. You lose 17,890. My next key support, which is pretty major, 17,843. To the upside, we're looking at pretty key resistance being about 17,963, 964 right there. You know what? If this rolls over, I'll watch for a potential mini double, but this is a very key support level in here. So, you know, I got to stick with potentially choppy unless we break through that with momentum or consumer sentiment numbers. Now, if this comes down, consumer sentiment numbers come in better, I'll watch for that double. Thank you, Sterling. Putting in the news. Barr speaking now. Did you see what the Fed is also doing for stress test? If you don't, look up what their 2024 stress test things are. The Dow. The Dow's interesting because we had the lower probability double that never triggered, confirmed and never triggered, but this is now, I'm going to be watching this because of the other doubles in the other markets. That level is a close below 38,095. Okay, we're still trading against a very key longer-term harmonic. You see, stopping it there, stopping it here on the 13th, and coming up there. So there's a lot of resistance shelf right there in the Dow. So keep an eye on that, but the key pullback level on the Dow right now is right around, I could flip this around, but it's going to be right around this 38,550 area. Miners around 38,670. To the upside, to complete the 87.5, 38.9. Now, what's more interesting is the Russell had a little mini double top this morning. A little mini double. You can even see it here. I mean, you had to trade it with momentum. There was no waiting for a close there, but that just, that was with the release. So that just double topped. Some of them, you just have to say that one was just not tradable, or it went so fast that, hey, not every setup can be traded. Remember that also. Nearly to the 87.5. If you look here, nearly to 87.5 and the upward channel line. If it does run up, 2073 is still the key level. Key supports coming in at 2025. The level below that is about 2,000. So those are the key levels I'll be watching with that. The VIX slightly elevated. Going to be paying very close attention to this today. 1437. What else do we have? What else do we have today? Hey, Christoph, the market is absorbing all this bad inflation. I know it is because it's still in buy mode. So the VIX really, with this information today, not really bouncing that much. The DAX, where's Coco? Here we had the sloppy double that did not work. There you go, Coco. I mean not the double, the wedges. You might as well throw them all out. Throw them all out. I agree, Coco. Wedges stink. There you go. Watch it on replay. So, really up into a key topping area, but the DAX literally has no fear in it whatsoever. So there's nothing really to do besides key support coming in at 17,120, 17 about 150 right now. This is interesting. The notes, 10-year notes, hitting in potential double bottom territory. Again, it might never trigger because the bigger pattern is with the sell pattern. However, for an aggressive trade, that could be, for an aggressive moving down the stop trade, because this is something I always watch for. If you get another pattern within a bigger pattern, if this were to trigger, you can always unwind the bigger pattern and then look to put it back on higher if it still remains. For example, let's say this double comes up back to the 50 to 62.5 and rolls over again without closing above the 62.5. It could be still traded. Now, this little mini double might never be triggered. Hold on one second. There we go. Just have to deal with something. There we go. Might never be triggered. So that's just, when you see a pattern within a pattern, can be really good to utilize for potential stop levels. Now, the level's lower, and I'm pretty surprised this hasn't broken down even more, but 109, roughly 109, then 108.13. The yield, same thing. The inverse, remember. Now, we've not officially raised the stop yet, but I'd pay attention to if it were to close, and as long as this double's still valid, this double top, if it were to close below 4.193, might want to take that into consideration and look to reestablish, or even put this on if you didn't get it on. And again, not trading advice, instructional advice, so you can paper trade this or learn to watch it. This would be something pulling back to the 50% harmonic and then seeing how that falls. Or if you're already on it and say, you know what, if it closes below this, we're probably pulling back again. That's a very aggressive stop level. Ways to look at it. Now, this is against the rotation zone, so keep that in mind. The next key target is 4.395, then 4.494. So you can roughly remember 4.4 and 4.5. 10-2s dropping down on still the double top, the mini double top, nearly hitting the first target. As I said before, if you are trying to trade the 10-2, and you have to do this independently, I wish they'd come out with a product to trade this. But this would be a very key area. That's close enough to move a stop. The dollar index, pulling back to rotation zone, still rotating back up, starting to wane a little in momentum. So I'm going to keep an eye on this, but it's really got to still drop that 103.20 level, get below that. Crude. This is crude. This did not pull back enough to invalidate it, so this key point, this is a potential double top. So just keep that in mind. I would go with the conservative target, so I'd flip them over if this were to roll. We just don't know where that top point is. But that's your key trailing level at this point, from especially these lower. Remember, there's a percent beat buy down here. So that's a key, at least that's the farthest away trailing level that I would utilize at this point. Today's low, from my perspective, is an even better trailing level. But that's a little pattern that could take it back to the lows, and that would still make a higher low if that were to trigger. But keep an eye on that. Now, inflation with oil looks to be trumping slowdown. What else? Apple nearing the important downside levels. Yeah, it has triggered. It did trigger. Tesla did trigger. We'll get to that in a second. Let me just jump to some other stuff. Yen, still in intervention territory. Yen, this is a valid mini double top. Sorry, keep an eye on it. If you are trailing from a longer term yen perspective, that is pretty key. Takes us back to the prior major breakout level. Euro, come on, Euro. Come on. There's no major thing yet, but if this does pull back down and still hold the 62.5, could be setting up a double bottom. Spiders, Oh, we're getting a little lag. Spiders do, after hitting that 87.5 and pretty much closing there yesterday, gap down today. So anything on the rally up would be to 502. 501.90 to 502 would be the gap fill. Technically 502.01. Then 503.50. The inverse reverse harmonics would just break out next week. You'll want to use the reverse harmonics and then really start watching 505.10 and 506.70. This is, again, in double top territory, but the key trigger for that would be a close below 490.72. So a long way off. These harmonics are still, I'm not going to flip them right now. They're still really strong levels here. 530, then 498.80 on pullbacks. So hope that helps out. By the way, the Qs to get to double top territory have to trade up to about 435.65. It has not hit that yet. So the futures hit the full target for the double. The Qs have not. And it's not in double top territory yet. So we'll keep an eye on that. But any upside target is about 435.75 and 437.42. The major support area is back at about, first area is about 433, 433.20, and then right around 431.50. The good old Bitcoin. The good old Bitcoin taking a pause. The key to pullback level right now is 49,900. Still, the next major target is 55.6. But Bitcoin getting very overbought to a top, at least could pull back. I'd say 49.9 to about 49,400 is the key support area. Tesla, we had the percent B buy, and then, followed through. It needed to get above that rotation zone, followed through with the inverse head and shoulders. 204.50, first target. Then remember, you have a gap fill. Would not ignore to 207.83 and then 209.72. Those would be the target areas I would be utilizing for that if you're in a Tesla bullish mode. Now remember, this does not come anywhere close to invalidating the longer term pattern. NVIDIA, which got, come on, a slight little pause bar yesterday. Boy, things are slow today. Things are slow. But NVIDIA, remember, the low from the 13th is very key now. 696.20. A close below there could put in a more substantial top, although it still is against the daily rotation zone. That's the key thing I'm watching. And what happened to my mouse? There it is. What else do we have? Apple. Oh, Palantir too. I did not. I did forget, and I remembered. Apple, yes. Apple's getting very close to very key support. Let's look at the longer term Apple. You see right here. If we put on the harmonics too, from this, if we look at this, right now I'm paying attention because anywhere between the 50 and the 62.5, we got a lot of support in here. But if we close below 180, I just look at 180, could be triggering a bigger pullback pattern. So really keep an eye on that. Palantir, there you go. Let me get to the daily. Wow. All right. Again, you had the sloppy double, the breakout. Yes, this is a little potential double top. That's the only thing that would be a bearish sign right now or a great trailing level. Other than that, trading up against the prior 50% harmonic, 25.48. Let me take off a couple of these other levels higher so we can see stuff better. But you do have, remember, if it keeps running between this 25.50 and 30.36 area is the major topping area. And you see here you have major substantial. So it broke down from all-time highs, flagged up, and then headed down. We're heading back into this very key area. So I watched 27 and 28.75 within the levels between 25.50 and 30.35. Those would be the key levels I would be utilizing right there. Okay, and by the way, that little mini double, were it to trigger, only takes it back to the prior breakout zone and the 37.5 harmonic. DOCN, thank you, Sterling. Thank you for putting in that in there. Okay. Well, right now, you do have a little mini double top in Digital Ocean Holdings, which could take it all the way back to the 200. We're open today, so that's the key level. Other than that, let's take a look from a longer term level. The longer term levels, these are the key, oops, hit the wrong thing. These are the key levels I would utilize if you're trying to learn this at home, and look at that. Right there, stalling out at the 12.5% harmonic projection, and then the next level would 43.27. Also remember to use your major retracement harmonics. And closing yesterday above the 62.5, so still it struggled with a bit to close above that. But on a continue, if this double does not trigger, it still now favors an up move with the rotation zone also. And look at the cluster you have. 43.27 to 43.61 would be the next major targets I would be looking for to the upside. And remember, you still have a gap fill left behind. All right, I did DOCN, I did Apple, we went in KRE. KRE, the regional banking, which this, I didn't put this out, but this was a double top that has triggered. Boy, what a mess this is right now. Hitting the stop reduction now. The other one did not hit the first stop reduction, and that does not invalidate it yet. But those are your key. That's exactly how I'd still set it up with targets. And what else do we have? DLTR, the famous Dollar Tree. Dollar Tree has a beautiful, beautiful potential double top, taking it back below potentially the 200. So there you go. There you go. That's about it for today. Thank you for tuning in. Everybody have a fantastic and fabulous Friday. And I shall talk to you all on Tuesday, because Monday is a holiday. So I'll see you all on Tuesday. And I've got a lot to do headed into next Tuesday. So thank you very much for being here. I will talk to you all later. Bye for now.